Jai Hind. The picture that you just saw is a news article that appeared in the Economic Times newspaper last week. Why this news article caught my attention was in 2020, when India was under a corona lockdown, I used to receive calls from companies that claimed to be facilitating buying and selling of unlisted shares. HDB Finance was one of those companies. Now, what is an unlisted company and a listed company? Companies that allow their shares to be bought and sold on a recognized stock exchange like the National Stock Exchange or the Bombay Stock Exchange are called as listed companies. Shares of these companies can be bought and sold on the stock exchange. In contrast, unlisted companies are those that do not allow their shares to be bought and sold on the stock exchange, but shares of these companies can be traded or bought and sold in the private market. So the companies that used to call me in 2020 were selling shares of HDB Finance in the private market. The logic that they gave me on why I should be buying shares of HDB Financial Services was one, HDB Financial Services is a subsidiary of HDFC Bank Limited, which is one of the most profitable banks in India. Number two, HDB Finance could soon be coming out with a public issue, and the day this company comes out with a public issue and the shares get listed on NSE and BSE, my investment would double. So if I'm buying those shares at 1,200 rupees in 2020, very soon my money would double to at least 2,400 rupees or more. I always said no for such investments, and my friends and clients who asked me for a suggestion, I told them to say a no. I'm happy that I said a no, and my friends and clients who went by my suggestion and said a no, I'm sure they must also be happy today, because the share that was being offered at 1,200 then is today quoting at 625 rupees as per that news article. Worse than that is that the company has not come out with a public issue. So there's no way I can sell off my shares. Even if I want to sell it off at a 50% loss at 625 rupees, I can't sell it off because there's no liquidity. I cannot sell it on the stock exchange because it is not listed. My approach to investments has always been LSR. L stands for liquidity. Liquidity means you should be able to convert your investment into cash whenever you want. There is no point investing if you cannot get your money when you need it. S stands for security. Security of the money that you invested, your principal. Don't lose your principal. That should be your motive. And last comes return. Every one of us wants to earn a good return and the highest return possible, but we should have a realistic expectation of returns. See, money doubling in a month or 2 months or 6 months or a year, even a year, is unrealistic. Once in a while, your investments will turn out to be a jackpot, but that is sheer luck. And luck will not be by your side every time, every month, every year consistently. But diligence and patience will always be by your side, and you can earn money in the long term only if you're patient and you are careful and diligent with your investments. I started my video with a picture and I'll end it with a picture. This picture is about a listed share that has done well as a company and has given good returns on the stock market. But let me put up my disclaimer. This video is not for advising or promoting any particular share or mutual fund or investment. If you want to talk about your investments, we can have a one-to-one talk. Once again, investments are subject to market risk. Please read the offer document carefully before investing and consult your financial advisor and tax consultant before investing. I need to say this. Thank you. Jai Hind.